Here we are with one of my long-termers. If you know me and this channel, I've been talking to you about NEO for quite a while. I've been selling you this stock since it was $2 a share, okay? We've come a long way with this one. I've tracked every single earnings, every single monthly delivery update, everything on this company. And I'm always excited to see earnings, and we just saw some earnings be reported after hours here. Response, relatively decent so far, up around 1%. Obviously, expectations are high here. This is a company obviously not profitable at the moment, has not had a profitable quarter at all. But from a revenue standpoint, year over year so far, from the delivery reports we've seen, delivery reports that we've been able to see, we've been able to expect fantastic numbers out of this. So you've pretty well seen deliveries increase by over 300% on the year. Now, analysts expected a 400% increase in overall revenue, which is, by the way, I don't know if you need to mention that. That is incredible. We're talking about 5 times the business. So honestly, all things considered, I think they can, just based off those delivery numbers. They should be hitting that. But let's look at these earnings, see why people are reacting pretty positively. So overall, non-GAAP EPS came in at -4 cents. It's a beat by 95 cents, and a GAAP EPS of -48 cents misses by 33 cents. So if you know me, I'm more of a fan of GAAP EPS for sure. So the fact that obviously just because it's consistent throughout every company, it's a better metric for me to look at it. It's actual net income rather than adjusted. So looking at this, obviously from an adjusted standpoint, very close to profitability. So pretty nice to see. I don't know why their adjusted was so low. I don't think that was necessarily accurate in terms of the beat there. And the GAAP EPS, quite a big miss. Questionable as to why that is. Obviously, probably some issues with vehicle margin, I assume, with the new EC7, but we'll take a look at that. The revenue line, though, this is incredible. So not only is this their first billion-dollar quarter they've posted, they beat it, right? 480% increase, nearly 6 times the business this year. Nearly 6 times the business. Beats by 160 million. That's a massive beat for a company of this size. That is quite incredible. That data it's incredible. I'll just be honest with you. I look at this right away, right off the bat. $1 billion revenue here, up 480%. To me, look, the stock's barely up after hours, nearly negative at this point. And they just posted nearly 6 times the business increase, over $1 billion now. First billion-dollar quarter. Seems a little bit weird to me, but delivery of vehicles came in at 20,000, which is incredible. That is crazy, including 4,500 ES8s. That's incredible to see for the full quarter. 8,000 ES6s and 7,500 EC6s. Representing an increase of 422% from the first quarter of 2020 and 15% from the fourth quarter. So even a quarter-over-quarter growth. I find that quite incredible. Gosh, I just can't imagine that. I don't know. That's my perspective. That is quite the vehicle delivery growth there. ES8's even performing well. EC6 is continuing to do well. And ES6s haven't been replaced at all by the EC6s. I kind of expected the EC6 sales to take over and ES6s decline, but they really haven't. The guidance here, expecting total revenues between $1.24 and $1.29 billion US, which is incredible. By the way, in case you were curious, that's a massive increase year over year. That's even an increase quarter over quarter. If they hit those numbers, the company's well on their way to just incredible numbers here. Deliveries between 21,000 and 22,000. Based off of that data, you'll be putting somewhere around there in terms of dollar sales as well, representing an increase of 103% to 113% year over year. That'd be quite the delivery increase. I can't lie to you. So really good data there. Exciting to see. We're talking about doubling the business year over year here as well, potentially. Let's look at this press release, see what we've got going on. Obviously, we saw deliveries of vehicles. It's crazy to see really the consistent growth here. 2020 quarter one, huge issue there was being the fact that in the greater China area, obviously the pandemic struck first. Completely shut down, so that's why you see the decrease in vehicle deliveries here. But other than that, consistent increases every single quarter for the last 8 quarters. Just one quarter that was an issue because of, well, I mean, it's not a shocker. It was a complete shutdown. That is just, it's really good numbers. We do want to look at the net loss line, obviously. Net loss came in at $68 million. That, all things considered, and that's from a GAAP perspective, that's really nice. $68 million only is really nice. That is a 73% decrease from the first quarter of last year, and a 67% decrease from the fourth quarter even. I don't know about you, but that is quite incredible. It shows that this company is really getting towards profitability. Within the next year, I think they will certainly be able to reach a quarter with profitability. Now, as far as full year, we'll be looking probably a year or two out still. So, but once this company reaches a point of profitability, there's no turning back. I mean, this thing is incredible. I don't know. That's what I find quite nice. Quite nice. Vehicle margin was a number we wanted to look at. It's good to see consistent increase here too. Vehicle margin now 21.2%. Last year in the quarter, it was negative 7.4. They were selling vehicles at a loss, similar to what you saw with a company like Tesla. They were selling vehicles at a loss for the longest time. Then they finally increased their margins, and guess what? Profitability pouring through them now. Net loss, massive decreases. You see increases where you want to see them and decreases where you don't want them. That is what is nice to see. So, really good in that aspect. I will be looking now if we can find a balance sheet number, which I think is possible. I don't know if they'll show it here, which they will. One we like to see. Overall, I get U.S. dollars. There's only one chart for U.S. dollars, just so you know. Otherwise, it's in renminbi, but we like to look at U.S. dollars. Company's currently sitting at $7.9 billion of total current assets, which is actually really nice for a company of this size. It is an increase, certainly, from last quarter. Total assets in general, sitting at $9.3 billion. Also an increase quarter over quarter as well. Now, from a liability standpoint, total current liabilities coming in at $2.6 billion. It is an increase from the last quarter as well. By really less the overall than current assets rose, and total liabilities in general right now sitting at $4.6 billion compared to last year. Overall, assets rose really by a little bit less. So liabilities did increase by just a small margin more. So shareholder equity on the company right now did decline just a wee bit, but sitting at $4 billion is actually a really good status for this company at the sizes, and to have a balance sheet that's in pretty good shape for all the capital they've raised over the years. I find it quite nice. That's NIO for you. I mean, we talk about a company that's just in good shape. And you look over the last 5 years. Again, I told you to buy this stock when it was $2. You can trust me. Back in 2018, I was buying this stock, okay? I was buying this stock in 2018. I was buying the stock in 2019. I was buying the stock all over the place. And I enjoyed a nice run-up. 52-week lows, $3 on this company. 52-week highs at 67. The company's trading a market cap of 64, which all things considered, I don't think is that expensive. Likely this year this company will bring in right around $5 billion. Now, you take that into perspective, and you add that out. We're talking about 13 around 12 to 13 times that amount for market cap. I don't think it's incredibly expensive for what this company's doing. The amount of business they're growing, when you're talking about an increase in sales, obviously, likely for the full year, it'll double. They'll double the business. A company in that stature that is working on global expansion, I think deserves a little bit more of a favorable valuation. And I think over the long term, this is a company that's going to be valued higher. Now down after hours, I think it's crazy. If my cost basis wasn't $2, I'd pick some more up on the Robinhood portfolio, but I have another portfolio with it, don't worry. We'll be picking some more up. But that's what I got for you today, Neo. It's a banger of a stock, okay? Long-term hold. I think it's a great spec play. That's what I got for you.